Moving on from the DCF valuation, we dive into relative valuation. This method is essential for investors comparing the value of one stock against others or the broader market. Here's how it works: stocks are priced by comparing them with similar stocks or the industry standard. The aim is to identify whether a stock is priced fairly, over, or under its peers. Generally, we focus on various financial ratios, like price to earnings, price to sales, and price to book, among others. Each industry has its unique benchmarks, making some ratios more pertinent for certain comparisons. This approach helps in understanding a stock's relative worth by matching its financial metrics against those of similar companies or industry averages. However, choosing the right ratio can be challenging as different industries favor different metrics. A company might show a low price-to-earnings ratio yet a high price-to-book ratio, making the investment decision tricky. Initially, the attractive price-to-earnings ratio may lure you towards investing, but the elevated price-to-book ratio could prompt second thoughts. As the variety of ratios grows, so does the complexity of the decision-making process. Essentially, while one ratio may encourage investment, another could deter it, highlighting the nuanced nature of evaluating stocks. To simplify this complexity, we've employed a weighted average approach, treating all key ratios equally. This method offers a more rounded view of a company's pricing, capturing a holistic picture by considering multiple financial aspects simultaneously. Let's now delve into Apple's stock through relative valuation. In our platform, you'll find the View Type drop-down menu offering two insightful options. You can either compare Apple with its top 10 competitors or assess it within the entirety of its industry. Once you've made your selection, you'll pick a scenario best, base, or worst to generate Apple's relative valuation instantly. This streamlined process eliminates the need for sifting through various financial ratios or spending countless hours on analysis and comparison. After that, you're presented with a comprehensive table showcasing Apple's competitors' pricing all at once. This immediate overview allows you to effortlessly evaluate whether Apple stands as a more appealing investment option compared to its rivals. Following this, we've transformed the data from the table into a chart for enhanced visualization. This graphical representation aids in grasping the comparative data more intuitively, making your investment decision-making process both smoother and more informed. While relative valuation is convenient and quick, it's not without its risks. This method, based purely on comparing multiples, can lead to inaccurate conclusions if used in isolation. The key is to complement it with thorough analysis, such as DCF valuations, to get a fuller picture of a stock's worth. Remember, apparent bargains can be deceptive. It's essential to dig deeper, looking beyond mere multiples to understand a company's fundamentals, growth potential, and unique market position. By doing your homework and using a blend of valuation methods, you can better navigate the complexities of investing and avoid the pitfalls of relative valuation.